Hello, this is Brian Mullins, Rose Rock Realty, coming to you today with our March 2019 real estate update for Oklahoma City, Moore area. So there's been a lot that's happened since the last month when we did one of these. So I'm going to try to hit everything and try to keep this fairly brief. So let's start off looking at our close volume. You can see we're down in Moore year over year. MLS, we are up just a smidge. That number, especially in Moore, is getting held back by inventory and by supply, which you can see on the last row. You can see our close price, and we're actually up quite a bit year over year locally. As we've talked about every month, more that number, it can vary a lot just because we're talking less than 100 units. So it's pretty easy for one big house or one really cheap house to slide that. But you can see nationwide, we're holding a fairly steady clip. Pendings MLS-wide have gone way up. We were really low in the winter, and all that inventory has gotten eaten up. We were looking at a lot of price decreases, and now that we're in the spring, we're seeing a lot of these going pending, and not enough inventory coming online, which is the last row talking about supply. We are super duper low on supply, which is hurting our actual close volume because there's just not enough homes out there for people to buy. So let's talk about our top news. The Federal Reserve has indicated that there's no more hikes in interest. So this is kind of the underlying interest rate for the economy that everybody looks at and kind of follows. With that has pushed rates down, and it's also got the market in a really good position to kind of hold steady. There's some other factors, and we'll get into that here in a second. We've talked about the whole housing supply being constrained due to low inventory. That's pretty much everywhere across the country. Mortgage rates are falling. They're actually lower than they've been in the past 12 months. U.S.-China trade talks, we've been talking about this, they continue. We actually just had news come out. The trade deficit is falling. So what that means is more money is staying in the United States rather than being spent in China for goods. The yield curve has been inverting, but we actually had another really important yield curve inversion happen this last week. So we'll get into that a little bit more in a minute. And unemployment remains low. We don't really see anything changing in that. Here's our mortgage rates. We're down 4.25% or so on a 30-year mortgage, which is stellar. And you can see it's been quite a while since we were there. Back in mid-18, early to mid-18, last time we were there. Let's look at our closed. You can see that overall, and this is some seasonality, our closed are up, but they could be up more if we had more inventory. You can see our prices are holding steady and increasing just a little bit, which is perfect. We don't want to see big hikes in pricing. Supply, as we talked about, our supply is super low, and you can see that dip, which you can see we also had this dip last year as well. So going from January into March, you can see we had the same dip, and then we kind of level out going into the spring. So kind of expect that to happen, maybe not as much of a leveling. So let's look at our key takeaways. Before we do that, I want to show you the yield curve. So here's our yield curve. This is what our current yield curve is. Now I could do a whole video and everybody would fall asleep about what this means. The simple explanation is this is what the market rates are on on bonds based upon their maturity. So 1 month all the way out to 30 years of maturity. So in a normal market, you see like what we had last year, the year before, you see where we have an upslope. That means that the market is going to be better tomorrow than it is today, or the same, but you have the time value of money. What we see now is people actually think the market is going to be better today than it's going to be in the future. So it's not a full inversion. A full inversion would mean it's going this way. It's down sloping. But we do see, especially if we look at our 5-year back, we are really starting to see inversion. And you can see here our 10-year, 1-year spread, we are right at a zero spread on the 10 to 1. And you can see, as they have stated, yield curve has predicted the last 7 recessions. And so you can see, like here is '06. We went inverted in spring of '06. And you can see, I mean, as you remember, the recession hit in '08. And so it's kind of a leading indicator, so we're watching it. And we can see the same thing with our 10 to 2 year spread. We are really close to hitting that inversion mark. And so this is just kind of a warning sign for what is happening in the market. So key takeaways. Market inventory, market sensitivity is showing that mortgage rates mean a lot. That's why we saw a really soft market going into the winter, and why we really started to see some of it's seasonality, but it's more than just seasonality this winter. So people are sensitive to interest rates, and now's a good time to buy. Interest rates have come back down, and we expect them to stay fairly consistent and maybe even drop a little bit. Inventory is holding back home sales, low inventory and more, and we just talked about the yield curve. But it's a great time to upgrade homes. As we talked about last month, as we look at homes and the prices of homes, as we go up in price, the market gets, there's more inventory. So it's a really good time, like if you want to go from a $150,000 to a $250,000 home, you'll be able to sell your $150,000 home for super top dollar, but that 250, there's a lot more inventory. So it is important to hire the right realtor whenever we are in a market like this. In any market, we make sure to get your home sold and get you into the home for the right price, because there's so much that goes into it, and you can't find everything online or believe everything online. You need a professional that can help you. So if you have any questions, do not hesitate to call. My name is Brian Mullins, broker owner, Roserock Realty. That is our office number, 692-0663. Find us online at roserockrealty.com, or come visit us. We're right on Main Street in Old Town Moore, between Broadway and Howard, 121 West Main. And we're actually planning on doing an open house at the 1st of May. So we will get the exact dates soon for that. And you will be able to check our Facebook page and get the invite, and we're going to have a big party. So thanks everybody for watching. Have a good day.